Welcome to this day trading tips video, and today we're going to talk about how to read volume on intraday charts. You know, it's interesting, a lot of people will read about volume and get very enamored with the interpretation of volume patterns, and that's a good thing. It's good to learn how to read volume for sure. But there's a big difference in how you read volume on intraday charts as opposed to daily charts, where each bar represents one day of activity. And I'm going to show you why that is. So first of all, let's take a look at what we've got here. So we've got a nice move up this day, then it goes sideways, and then from there, it just goes up the rest of the day. All right, now, during the sideways time, the market, actually, we got big volume in here. Right, this whole section right in here has nice big volume, and that includes this section where the market is retracing. So it's actually retracing on still very high volume. In fact, some of the highest volume of the day if you take this across. And yet it's retracing. Then, when it goes sideways, volume kicks in to roughly about this level here. Okay, we get a little bit of a volume spike in this section, and if we carry that up to the price action, nothing really happened in price. It just still stayed within that consolidation. Then we do get a nice little volume spike here, and that does help to propel the market into a new uptrend. But a lot of people would think then that volume should stay strong in order to sustain that uptrend, and it does not. In fact, it stays below the level that we had early in the morning, and it stays down into about this zone until about 30 minutes before the close. So the sustained uptrend, if you'll notice that, for the majority of the day stays below the volume. Actually, it stays about equal to the volume of the contraction period, and it stays below the volume of the morning. So some people might wonder, well, that seems strange. How can that be? All right, there's a couple of reasons for that. Number one is that, as I said, intraday volume is interpreted differently than the volume on daily bars, weekly bars, and monthly bars. And the reason for that is that intraday, there is what we call a meta pattern of volume. And that volume meta pattern is basically this. It will be high in the morning, and then it'll kind of come down like this, and then toward the close, it goes back up. And that's your basic meta pattern. It's almost like a saucer, but it's a little more weighted toward the end of the day. And it's that saucer pattern, that is your meta pattern, that when you read the individual bars, volume bars with the associated price bars, you have to take into account the meta pattern that is fighting against the individual pattern for each bar or set of bars. You have that on intraday charts because you have most of the volume is on the open, and in the first hour or two of the day, you get a burst of volume at the end of the day, and then during the middle of the day, during lunch, and even after lunch, normally not as much. Now, it's a meta pattern. It's not true every single day, but it is true most days. That's your general pattern. So this is a general pattern that's going on that really doesn't mean much with regard to interpreting price action. It's just that's how the number of participants time their participation in the market during the day, during a day between the open and the close. So the patterns are skewed a bit by that meta pattern. In other words, the smaller patterns, the micro patterns on volume, are skewed by the overall meta pattern. So when you're studying volume, make sure that you are, if you're an intraday trader, if you're a day trader, make sure that you're reading volume patterns that are specifically designed for day trading and not for longer term charts. Now, let me show you one more thing while we're on this topic. So now I have switched it over to a daily chart. And now volume becomes much more meaningful because we're not fighting that meta pattern. We're able to just read pure volume patterns based on how price is acting. So here we get an obvious peak in volume, and the market had gone down dramatically. So that's an exhaustion pattern, and that's very good. Now, here's the key. So we look at that, we mark that, and then we look here and we see that the market comes back to retest this low over here. Now, what happens with volume? It's much lower, much lower. So that is a signal, and you can read this purely with price and volume without having to worry about it battling that meta pattern we have in intraday charts. And that's a good signal that that market is probably going to put in a low there because you don't have as much strength going down. Now, interestingly, as the market goes up, a lot of people would think, okay, that's a very nice move. That's a big climb. Why isn't volume going up? Okay, so this is where a lot of people misunderstand volume. You don't always want a dramatic increase on volume to continue a trend, in order to sustain a trend. And the reason for that is that if it's too strong early on, then all the market participants that want to participate already are in, and there's not a lot of people to come in later. So a gradual addition of volume over time actually helps to sustain trends. Now, what's interesting though, what you don't want to see is this. So the market comes back down and then it goes back up and it retests this high. Now, when it retests this high, what happened with volume? Okay, now volume went actually down. Okay, so that's not a good sign for the sustaining of an uptrend. In other words, you want it to maintain, but you don't want it to be too dramatic. So like over here, it was so dramatic, and that was the end, right? That was capitulation. So you want a nice steady continuation of volume to come in to sustain a trend, but you definitely don't want it to decrease. And when the market's decreasing in volume, and comes back up and retests a high, and one that's already been established, well established, that's not a bullish sign. All right. Then we get an increase in volume here. Again, volume decreases here. All right. And that lines up with this move here. Then we get another increase in volume, and we actually make the highest high in volume since over here. And when does that happen? Well, that happens right here. That move starts there. And so once again, we get a nice move of volume. Remember, it's an increase in volume even though price is going down. So you don't necessarily want the volume histogram moving in the same direction as price. If you want to see a strong move, you just want to see good volume. And again, because it reaches up to this high, it's an exhaustion pattern. It's an overextension of volume, and again, it's coming back down to this support level over here, which is already established. So that support level combined with an exhaustion pattern of volume indicates that that's a very high probability low, and that's probably going to be it, at least for now. So that's how you read volume when you're just reading it purely. Just understand that when you study volume, whether it's in a book or a course or whatever, you have to study the patterns on volume for daily charts. And then you have to also be sure that if you're going to be intraday trading, you're studying different patterns because they're not the same. Hey, I almost forgot to tell you I've got a special offer for you today. Absolutely free. But first, if you liked the video, please click the thumbs up icon below and leave me a comment telling me what you liked about this video or what you'd like me to cover in future videos. Now, here's the special offer. I'm giving away one of my favorite trade strategies. It's one of my best trade strategies called the Rubberband Trade that has an extremely high win-loss ratio. It's actually a very simple strategy. You can learn it in about 26 short minutes. So get the video explaining that trade strategy absolutely free by simply clicking on the icon in the top left corner, or if you're on a mobile device, just click on the little eye with the circle around it in the top right corner of this video or in the description below. Once you do that, I'll personally email the video to you.